Thanks, Greg. And good afternoon. Let me get this working. My presentation today will provide an overview of copper with a focus in particular on what we're doing to improve our current operations and discussing some of our brownfield and greenfield growth opportunities. And although we have a solid operating base in stable jurisdictions, it really is our people that make the difference. And it's this team that enables us to deliver on our commitments, and we did that again in 2014, making our cost and production targets. Before discussing some of the exciting things we're doing to improve and grow our business, I would like to reflect briefly on one area that brings the entire team together and continues to drive our actions in copper, and that's safety. Within all of Teck, we're very aligned on our focus on high potential incidents, and we do this by first identifying risks and then putting effective mitigation and control strategies in place. And this is all about eliminating serious injuries, and this is taking place across all of copper and across all of our projects. Just want to briefly touch on one example of this, and it's our access road at Quebrada Blanca, which is located at very high elevation in the Atacama Desert. A typical journey from the paved highway, which is the main north-south highway in Chile, takes about 2.5 hours, and drivers manipulate their way up about 240 curves to get to the site as they go up and down each day. We've had numerous serious incidents over the last couple of years and lots of close calls. So we had to do something different and take a different approach. Throughout 2014, we'd made significant improvements, and that includes the road itself, putting up heavy concrete jersey barriers to protect vehicles from going over as a last line of defense. The number of trips have been reduced, and the vehicles now go up in convoys with escort vehicles as well. We've also installed driver behavior monitoring technology on most of the vehicles, and this also technology that gives the drivers real-time feedback as they're manipulating those curves. And the real measure of success is that we haven't had a high potential incident on that road since middle of last year. So it's just a great effort by the team. And as you can see on the chart at the top right, we've had similar successes across the business, and the high potential frequency rate within copper is less than half of what it was 5 years ago. We've still got lots more work to do across the entire business to reduce serious injuries. But the focus on managing our key risks not only improves safety, but it really does help guide us throughout the business on how we effectively manage things. Our copper business continues to consist of 5 operating assets, and all located in the Americas. The copper business unit generated $2.6 billion in revenue in 2014 and $1.2 billion in gross profit before depreciation and amortization. Duck Pond will be closing its doors at the end of middle of this year and has reached the end of its economic life. But our remaining operations have a long future ahead of them and tremendous resource potential from which we can grow. And Highland Valley, Antamina, and CDA, Carmen de Andacollo, have mine lives in excess of a decade, 12 years or more at each of them. But that doesn't tell the whole story. We have tremendous resources at each of these sites, and we'll be able to extend those operations for decades to come, and we're working hard to do that. This is also true at our Quebrada Blanca operation, with the notable difference that the QB2 hypogene project would be a 5-fold increase on what the current operation is producing today. Although now is the time to really prioritize our efforts, we do have a strong and deep pipeline of greenfield projects in Canada, the US, Chile, and Peru. And the depth and quality of this pipeline allows us to explore further growth and value creation opportunities as market conditions warrant. We are targeting at least a 6% increase in our copper production in 2015, with the midpoint of our guidance at 350,000 tons of copper contained. Higher production is primarily driven by Highland Valley copper this year, which is more than offsetting the planned closure of Duck Pond. One of the key drivers of both the increase in production as well as the reductions in costs anticipated this year is our focus on productivity improvements and debottlenecking efforts. We've hit record throughput numbers at Antamina, as Ian stated earlier, and we've achieved well above the average design capacity at our Highland Valley operation with the new mill optimization project. And that's performing very well. All sites are focused on controlling costs across all aspects of the business, and this includes management of our contractors with a particular focus on maintenance activities, right through to how we use key supplies and consumables that go into producing every pound of copper. A great example of this success is the success we've had at the QB mine, where we've reduced unit costs substantially, and I'll talk a little bit about that later. Overall, we're targeting about a 10% reduction in our unit cost in 2015, from $1.65 in 2014 to $1.50 this year, and that's after byproduct credits. I'd like to now take a deeper dive into our operating business and show you some of the things that we're working on to optimize our assets. This chart shows the annualized impact of our cost reduction initiatives in copper from both 2013 and 2014, totaling about $217 million. These savings are derived from a wide variety of areas, not too dissimilar to what you saw from coal and the overall business. It includes reduction in employees and contractors and numerous productivity improvement initiatives. Throughout this time, a real concerted effort is being made to embed these savings going forward. And we've put various processes in place to make sure we're tracking and that we can sustain these improvements so that they're locked in as a normal course of business going forward. We continue to drive further improvements this year, and we'll have a particular focus this year on maintenance improvement, contractor management, and continuing to try and extend our throughput gains across the business. Just want to take a bit of a closer look at one of these initiatives, and that's the throughput gains that we've been able to achieve at Highland Valley Copper. Over the last few years, we've focused on our mine-to-mill program, and the tons per operating day have increased 6% from 2012 to early 2014, before we put the new mill optimization project into play. And I'm using tons per operating day because there was some shutdowns associated with putting that mill optimization project in place, so that normalizes what true performance actually is. So we went from about 130,000 per operating day in 2012 to 140,000 in early 2014. And really that's largely due to higher energy blasting and really upping the energy to fragment the rock better. The mill optimization project came online in the second quarter of 2014, and this added about an additional 9% of daily throughput capacity from where we were early in the year. So together that adds up to about a 15% improvement in throughput. So really great effort by the team there. We're continuing to trial further gains of using even higher energy blasting, ultra high energy blasting we're calling it. And we're also introducing a formal integration process at Highland Valley Copper. And really that's getting all the different departments within the operation to work together, really to drive organizational efficiencies and effectiveness in our day-to-day decision making, and we're formalizing that process. Staying with Highland Valley, throughput really depends on ore hardness, and we expect a drop in throughput in 2015 as we mine through a higher grade portion of Phase 8. Phase 8 in the Valley Pit is coming to an end, and it is quite a bit higher grade, but also harder. Copper grades are expected to be well above reserve grade in 2015, as you can see in the chart on the top left. but will drop again in 2016 as this phase is completed and we start to rely more heavily on our Lornex deposit, which is lower grade but also softer, so we'll see throughput come back up again. We're also in the process of a major sustaining capital project within Highland Valley that involves relocating one of the primary in-pit crushers, and that's in the Valley Pit. And this really, the driver for doing this was some geotechnical stability, but it also releases some high-grade ore in that area of the mine that will be mined over the next couple of years. So that project is going well. We'll be relocating the crusher in the coming quarter, and that'll be up and running very shortly. We expect production in 2015 to be in the range of 140 to 145,000 tons of copper before dropping back to kind of the 120 to 125,000 ton range in 2016. Just one last slide on Highland Valley. I would like to update you on some of the exciting opportunities that we're working on. And over the last decade, I think most folks are aware that the operation has been extended a total of 3 times, and they've always been incremental extensions. And we're looking at doing one more incremental extension with the Bethlehem mine. And the Bethlehem mine actually closed down in the early 80s, and we're looking to reopen that mine. The first phase of Bethlehem would include about 134 million tons of ore at similar to reserve grade and relatively low stripping requirements. There's some, I think you can notice in the picture on the top left, there's some tailings to remove from the Jersey pit, and we're looking at different ways that we're going to do that, potentially even recovering some copper out of those tailings. But in general, there's not a lot of work to do to reestablish access into this area, and there is capacity in our existing tailings dam to handle that material. We're currently going through preparing our permitting documents to get that amendment through to have that as an option going forward. But linked with this Bethlehem project, there is a short another project that really looks to enhance value that could come into play in the next couple of years, and that's something we're calling mill maximization. And it really came out of our debottlenecking analysis of working with higher energy blasting and the increased throughput that we've been able to put through the mill optimization project. We're looking at how we can further extend gains and make sure that we can get the recovery from that material and potentially enhance recovery and also enhance throughput, maybe by a modest amount. But we think it has the potential to add about 15,000 tons of annual copper production starting towards the end of 2017. So we're just currently finishing off a pre-feasibility study that should be finished by the end of April, and we'll be looking at the results of that study and making our decisions as to next steps after that. We've also kicked off a formal scoping study we're calling HVC 2040, and it really is looking at adding the next 10 to 15 years of life, including tailings capacity options that would go with that. So stay tuned. I think there's more good news to come out of Highland Valley. Turning to our Antamina operation, as planned, there was a substantial drop in grade in 2014 due to phase development. And you can see the picture on the top left. It's some pretty interesting areas that we're going into to establish those areas for mining. But there is additional stripping requirements that were required, and we're building up the mine fleet to do that. And really, this is about opening up new areas to sustain production going forward. Copper production was also affected in 2014 by lower recoveries as we processed some lower grade material from historic stockpiles, some of which was oxidized. But really, offsetting this drop in grade, it was a record year in mill throughput. The team was very focused on debottlenecking efforts, and that was through our material handling system and our crushing system. And we continue to look at improvements that we can make in 2015 to maximize production. And we should start to see grades head back up as 2015 progresses as well. Not to historical grades, but they'll gradually start to come back towards reserve grade. Antamina has also put a major focus on cost reduction efforts in 2014 to offset the impacts of these lower grades, and these efforts will definitely continue and are continuing in 2015. In the fourth quarter of this year, we did have 2 labor disruptions by the union, each of which lasted a number of weeks, and which were subsequently declared illegal by the authorities. But while we were working to resolve these issues, the site was able to continue operations and maintain production, and they were able to achieve their operating plan for 2014. The current collective agreement does expire in July 2015, and we'll be putting mitigation plans in place again for that. At our Carmen de Andacollo operation in central Chile, you can see that we've made significant progress in increasing our mill throughput over the last number of years, despite ore hardness that has been increasing as we mine deeper. In 2014, we did have some failures on key pieces of electrical gear, which did hamper production and associated throughput. But we do have numerous initiatives underway in 2015 to offset the declining grades, and the grades should start to level out for the next few years from where you can see it in 2015. But we do have high energy blasting initiatives that are paying big dividends at Carmen de Andacollo as well. We're continuing to focus on our key cost drivers, and we've been quite successful in this regard, despite having to process more tons to get each pound of copper out. We've been able to hold the line on costs and make some improvements. Although originally scheduled to finish in mid-2015, we have been successful in extending the life of the cathode operation to the end of the year at least. And we're doing some work on reprocessing old spent heaps or repios, and looking to remove copper from those spent heaps. We've undertaken some trials that have been successful. We think it's economic, and we're currently going through the permitting process for that. And it would be approximately the same rate. So still modest production, but it helps. Our Carmen facility is located adjacent to the city of Andacollo, and engagement with our neighbors, it really is critical to our success at Carmen. Earlier this year, there was a law passed to do with dust emissions, and we have a mandate to reduce our dust emissions at our operation by 65% compared to previous historical levels. We really did take a very proactive approach on this. We've already reduced levels by 50%, and that's going to be a key focus for us going forward in 2015. And it won't just stop at improving our operation. We really are engaging with the community to reach out and see what we can do to help them with their own dust reduction targets as well. Turning to Quebrada Blanca, our cost reduction efforts, as I mentioned earlier, really have paid off. We anticipate cash costs in the range of $2 per pound in 2015, and that's compared to $2.75 a pound back in 2012. And that's really despite having less production this year compared to 2012, so it's less production to spread our fixed costs over. So it's really some great work done by the team at QB. We're expecting similar production this year, and we'll be seeking to maintain this production rate, if possible, over the remaining life of QB. There's various opportunities that we're looking at, including similar to what we're looking at Carmen de Andacollo, reprocessing spent heaps. And we're also looking at potentially leaching hypogene resources or stockpiled hypogene material that's sitting on surface right now. We've also we've made substantial investments in our plant and associated infrastructure over the last number of years. That's just finishing up, and really that's to help our maintenance and to really maximize the amount of tonnage we're able to process through our heap leaching facilities going forward. So I think we're well set up for the next few years for the supergene operation. We're continuing to make good progress on updating our permits for the supergene operation, and we're working closely with regulators and our communities to address any outstanding issues or concerns. We're currently right in the middle of that process. But we do anticipate getting approval of that SEIA application in the third quarter, but of course we're not in entire control of that process. Just going to turn briefly to our pipeline of growth opportunities. And for QB Phase 2, it remains a priority project in our development pipeline, our portfolio. It is a long-life, low-cost project that will produce about 240,000 tons of copper contained in clean, high-quality concentrates. We're making very good progress on our permitting activities for this project, and we're collecting the remaining baseline data, but we don't anticipate resubmitting before the fourth quarter of this year at the very earliest. We do have to wait for approval of the SEIA for the existing facilities. And we'll look at that. We'll go forward and incorporate the approved SEIA from the existing facilities into the base case for the new project. While we've slowed down engineering and procurement activities, we do continue to look for capital cost reductions and all other ways to enhance value on the project while we're advancing permitting as the priority. Turning to the rest of the portfolio, we are taking a measured approach in how we advance our remaining projects. As in 2014, we continue to minimize our field activities and are limiting work to only those areas that would add substantial value to the business case. We're in the process of completing some metallurgical test work, including some drilling at our San Nicolas project in Mexico. And we're also getting ready to start a small exploration program at our Shaft Creek project in northern BC. As for engineering work, it is quite limited. We're focused on Zafranal, which has a pre-feasibility study underway with our partner in southern Peru. And that pre-feasibility study should be complete at the end of this year or very early 2016. And for Valencio, we still have a small team looking at better ways to configure and optimize the project from the feasibility results that we obtained in early 2014. So just to wrap up in summary, all sites continue to be actively engaged in business improvement and cost reduction programs. We've made very good progress over the last 2 years, and we'll continue to drive this in 2015 and working off the successes we've had to date. We continue to drive plant throughput rates up and unit costs down at all sites and offsetting any lower grades or the impact of lower grades on our profitability. In summary, Teck has a portfolio of stable and long life assets in Canada, Chile, and Peru, with brownfield growth opportunities which we're advancing, and a very strong pipeline of new greenfield projects when we choose to bring those on. So thank you, and with that, I'll turn it over to questions.
Thanks. Dale Raymond Goldie from Salmon Partners. Is there a Nino, and does its presence or absence, can you tell us what effects they would have on British Columbia, Peru, Chile?
Yeah, right now we don't anticipate any effects. It's not something I would be an expert in or want to comment on. What I can comment on briefly is some of the rains and storms that have happened recently in central and northern Chile. Our operations weren't overly affected. QB had some washouts on their road, but continued to operate normally through this last week. And our Carmen de Andacollo operation in La Serena wasn't hit as hard as some places in north central Chile. Really, the impacts of the recent storms have been more around the Vallenar, Copiapó areas, but not directly affecting us in a material way.
This dust suppression program at Andacollo, does it have an expiry date of when you need to reach that target? And if you don't reach it, what are the penalties?
Yeah, it's actually a very firm date, and it's 2.5 years, so mid 2017. We've made, like I said, substantial improvements in reducing our dust emissions. There's various stages that are laid out in this government plan, and it includes getting agreement on how we monitor, how we measure, and that's the basis of how we can improve against those targets. We have a mandate to get down to a certain number of tons of dust. We're within, I think, within 20% of hitting that target, so 20% further reduction, but we've already made a 50% reduction. It is harder to get that next 20% out, but we really have made some good progress, and it's not just the progress at the site, but other operations in the area also have these targets, and the town itself has these targets. And we've done a lot of good work in the town to reduce their dust, including helping to clean the streets, removing old historical tailings that are in the middle of the city that weren't ours. And all of that contributes to the overall dust particulate matter in the town. So we really are taking a very coordinated approach. And that would be a negotiation with the government, because there's not just one contributor to the dust. But we're committed to meeting our target.
Yes, I just had a question on your costs. Of the 15 cents cost savings you're anticipating in 2015, how much of that is due to exchange rates and energy?
Yeah, so I think, as Ron pointed out in the budget, we've assumed a $65 oil price in that budget. And again, that will fluctuate. And there would be some exchange rate effects. For our operations in Chile, they're probably 40 to 50% exposed by the Chilean peso, which is also a bit weaker. Antamina a little less so exposed to the Peruvian sole. And obviously Highland Valley would have some effect as well. But really offsetting that would be byproduct credits and as well as just overall increase in copper production for this year is helping the cost reduction efforts. So each one of those balance each other out a little bit. So it gives you a bit of color.
And then just on the 100 million cost savings for the company for 2015, how much of that is for copper?
We're targeting $40 million within copper.
Hi, Dale. The Chilean government, federal government, has been pushing some of the responsibility for permitting to the regions and local communities. Have you experienced delays in the permits? And can you point to what type of delays? Because we saw something with Antofagasta where one of the district judges ruled that they had to basically stop the operation to make changes to the tailings dam and water procurement for the communities. Have you experienced any of those? And what do you think is what are you targeting for your SEIA on QB2?
Yeah, so there's a few questions in there. Yeah, to start with, it is very regional in nature as far as permitting in Chile. The lead agency does actually rest with the region, and we've had very good engagement with the regulators in Region 1, where QB is located. They're supported by the national government and the national regulators, but it really is the region that takes the lead. I'd say, back when the earthquake happened in Iquique a number of months ago, that probably had more of an impact than anything on our permitting activities. So it really is very regional in nature. And although Copiapó and Vallenar are faced with some very real challenges right now, we're not permitting in that region And I think that may be some of the difference. I think one of the other points you made was kind of the judicialization of the process, and yeah, that's something that I think companies have to work with their local communities, and those communities will use every avenue they can, including the courts, if they're not on board with your project. So we're really making our efforts to engage with our communities, understand their concerns and needs, and working with them as we go forward on QB. For QB2, I think that was the last part of your question. Yeah, we wouldn't, like I said, we wouldn't submit before the fourth quarter, before the very end of the year at the very earliest. And I think going through the permitting process for QB1 will help pave the way a little bit for QB2. It's the same communities, same regulators. So we would hope that that could be done in a 12 to 18 month time frame, but hopefully on the 12-month side of that window.
Hi, Boris Walker with Scotiabank. And back to QB1, if you get the approval on the FCIA, how long does that extend the mine life of the supergene?
5 years, so mining would extend out to 2019 and cathode production into 2020.
Okay, so when would you have to pull the trigger on the development of QB2 to ensure kind of continuous sequencing of production there?
Yeah, I think that's not our prime driver, is to make a continuous operation. I think if the stars align that's able to happen, I think that's great. I don't think the project is dependent on QB1. There is pre-production mining associated with QB2. I think it's a bit of a different skill set that would be required for QB2, the cathode plant versus a processing plant. I think it would be nice if we could have a continuous operation, but I don't think that is the primary driver. Right now, we think we have some opportunities to extend cathode production beyond that. As I mentioned, things like repeals leaching and hypogene leaching. Very early stages yet, but there's potential. We could go beyond 5 years at QB1 as well.
Okay, and just finally on QB2, it's been a long time since we've heard any CapEx estimates for QB2. Obviously we're in a deflationary environment right now. Can you offer any sort of sense of where capital costs could be for that project right now?
Yeah, we haven't formally updated our capital costs since the 2012 feasibility study estimate of $5.6 billion. Some of the commitments we've made would be against that 5.6 because we have placed long lead items that they're now on hold, but some things did get fabricated, and we continue to make some progress payments on those. Yeah, that's something we're going to look at as the year progresses to look at updating our estimate. But really, we're focused at the current time on what we can do to change scope and drive activity or work out of that plan for QB2, and we'll look at updating to current pricing as we advance permitting.
Would changing scope include a lower production base? Or?
No, I think it's more things like optimizing smaller footprints, things like earthworks. Is there better ways we can do things? Various, we'll look at our tailings delivery system, we'll look at our water delivery system. Are there ways that we can do that cheaper? So it's optimization efforts of the existing scope, so nothing that would be material in the sense of reducing scale or production throughput. We're still locked into the 140,000 ton per day rate and the 240,000 tons of associated copper production.
Thank you.
Hi, Jorge Beristain with Deutsche Bank. Just trying to track all the moving pieces here, but just to simplify it, I'd say that just based on the data you've put out here, it looks like your all-in sustaining cost for your copper business is about $2.50 a pound. And copper's at $2.75. So you're clearing 25 cents a pound on 660 million pounds. That leaves you with about 150 million to play around with. and you're going to spend 120 million on new mine capex this year. So I just wanted to understand, is that inclusive of the Jersey pit? Is that already in the 120 million? And what would the extension of the Hypogene project cost to extend that mine life at QB1 another 5 years?
Right. Yeah, so first of all, the Bethlehem is not in new mine development, but Bethlehem is also in the mine plan for later on. We currently anticipate Bethlehem, the Bethlehem pit wouldn't be a feed source for the mill until the 2020 range, and the capital cost for that is very low. So I think, you know, sustaining capital is we'll go in some waves for copper. In general, we're around that $175, $200 million mark for sustaining. And new mine development really will be very project specific. I think you made a comment about QB1 and the development cost of that. You know, we've invested in the operation over the last couple of years. The current capital plans are probably in that $25 or $30 million range for sustaining. It gets a bit complicated with QB1 because as part of the SEIA, there are closure-related costs that are part of that. And those are costs that we wouldn't anticipate spending should we advance and when we advance towards QB2. But I wouldn't anticipate any material change in our sustaining structure as a result of QB1 permit or extension.
Thank you.
Thank you.